Hello and welcome to Business Lunch. I'm Nisha Poddar. Straight to the markets. That's the big headline of the day, really, because Nifty 50, after breaking below the 17,000 levels, has seen some bit of relief coming in, but still 1% down in trade. And this, even these levels are sustainable or not, is to be seen in the second half of the trading session. At the moment, sensex are losing about 470 or 80 points in trade right now. As far as Bank Nifty is concerned, 1.6% down in trade. Remember, on weekdays, on global nervousness, it's the financials, the Bank Nifty, which has taken the charge in terms of performing on the reverse side, and therefore underperforming the key indices like Nifty as well as Sensex mid-cap index. That's where the carnage really likes, and as far as the weakness is concerned, and 2.2% down when it comes to the mid-cap indices right now. So that's the sum and substance. But my co-anchor today on Business Lunch is Mangalam Maloo, who's standing by at the big wall to really decode the fall in the markets and give us a more exhaustive account of that. Mangalam.
But as far as the markets are concerned, notwithstanding the recent recovery that we've seen in the last couple of minutes or so, the Nifty is still down about 1,000 points from the highs that we hit on September 15th, which is closer to that 18,100 mark. And in doing so, the Sensex as well as the Nifty have both turned negative for 2022. That happened on Friday itself. So from September 15 highs itself, the Nifty is down about 6%. The Nifty Bank, which is an outperformer, still positive for the year by about 9%, has fallen a little more by about 7.5%. Why is that happening? Well, a bunch of factors for that. The first one is global risk off after Fed's rate hike, as well as commentary, more commentary than the rate hike, because 75 basis points rate hike was priced in already. And that commentary led to the US 10-year yield moving to a 15-year high over that 3.75 mark. Importantly, the US dollar as well approaching that 114 mark, near a 20-year high for that. And that, as a result, consequently means that the Indian rupee has been at a record low, breaching the 80 mark, and thereafter now 81.6 thereabouts as we speak. And as a result of which, combined with the fact that India's valuation was nearly at a 2 times premium to the emerging market basket, led to the FIIs sell some positions. And that's what we saw. On September 21st, we saw 500 crore worth selling, 2,500 crore and 2,900 crores over September 22nd and 23rd. And as a result of which, by September, so far itself, the FIIs have turned negative in the cash market. And even in index futures, this is the expiry week. The FII positions are 80% on the short side, just about 20% on the long side itself. So what are the near-term triggers that we're watching out for our market? We do have a bunch of them. The first one, of course, is that the domestic market is doing well. We have been outperformers as compared to the world as well, because the Nifty, while it's down about 2% this year, the FTSE is down 5%. The Nikkei and Shanghai have been down 8 to 16%. Compare that to the US markets as well. It's down about 18% for the Dow. Nasdaq is down 30%. Some European indices also underperforming. So we're down, but we're still better than the rest of the world. Today's bounce happened from an important technical level, 200-day moving average at 16,993, and the near-term triggers that we have for our markets. The lower oil prices is a big positive. Consumption pickup ahead of the festive season is something that we'll be watching out for. Rupee being a fresh record low does well for exporters as well, and manufacturers will benefit from the China plus one factor. How much of that is priced in, and where do we go from here? Whether this outperformance continues or not is something we'll be watching out for.
A very exhaustive account. Thanks, Mangalam, for all the factors that we have to watch out for. But I would add to that the whole situation on the Ukraine crisis, the overall impact of that as well, tying in with interest rates as well as inflation and demand destruction that we have also been talking about. But one key aspect to watch out for is the rupee movement. Rupee opened at a fresh record low this morning, while the bond yields have also spiked. Lata Venkatesh is here with all the details on the rupee and money market overview. Lata.
Well, over the weekend, the fresh bad news for global financial markets was the way in which the pound tumbled because of tax cuts there. And that led to, as you just heard Mangalam say, the the dollar go to fresh 20-year highs, 114, and US bond yields went up to almost 3.8 on the 10-year and 4.2 on the 2-year. Think of a typical fund. When the risk-free return, where there is no currency depreciation fear, gives you like 4% for a 2-year and nearly 4% for 10-year, then it becomes more attractive to move away from EM currencies. So we saw the rupee fall in the NDF market in New York, and we saw all Asian currencies today down. nearly 1%, between half and 1%, and the rupee had to follow suit. The Reserve Bank was there supplying dollars like it did even on Thursday and Friday, but it is not trying to protect a level. It did help the rupee end a little south of 81 on Friday, but today at 81.5, 81.6, 81.65, there was supply, but it was not giving an indication that it would, support a particular level. So traders are watching. How long will FIIs keep selling? At what point will they stop buying dollars? At what point RBI says this far and no further and starts supplying torrential amount of dollars? It's really wait and watch. Since the Reserve Bank protected a whole number like 80 in the past, people were watching for 81. Now they will watch for 82 and see if that's protected. Simultaneously, as the US yields went up, Indian yields have also risen. So the crude fall is not that big a factor. We are moving in sync with global yields. And now the yield on the 10-year is higher than what it was on June 30th. So this becomes a mark-to-market loss for the banks. And that may explain why the financials, which were such hot favorites 2 weeks ago, have now become another factor of sale in the market. So all these are going to be watched. The Citizens Monetary Policy Committee of CNBC, which is a shadow MPC, is looking at a 50 bips hike, and that's exactly what the markets are pricing in. The 1 month OIS and the 2 month OIS are factoring in a 50 bips rate hike on Friday, and the 1 year OIS is looking at a 6.9 terminal repo rate. So quite a bit of rate hike expectations.
All right, thank you.